All right, greetings and happy Veterans Day to everyone. So let's go through SPY. I think there might have been some volatility in the markets today that might be a little, I don't want to say excessive, but greater than what would normally happen because it's Veterans Day and the bond market is closed. And believe it or not, in a lot of ways, bond trading and equity trading are tied together. So I like to look at the SPY, which is the ETF that tracks the S&P 500. Every ETF has a fact sheet. So SSGA, meaning State Street Global Advisors, runs the spiders. To be an ETF market maker or to have an ETF out there, I mean, you need a lot of money, a lot of computational power. It's not like you could just like do it. So it's like these really big firms that are doing it. Um, anyway, might I digress? So we can look at the holdings. Look at that. Nvidia is now the biggest stock in the S&P. Not surprising, about 7.16%. Apple is 6.3%. It's kind of interesting how these things change around. Amazon is 3.3%. I think the broad takeaway from this is that the S&P 500 has 500 stocks, okay? And Alphabet, C and A are basically Google. So you have 9 stocks out of 500 that, let's see here. 13, let's just say roughly 20, I don't know, 30. So you get like just a couple stocks account for a big part of the market. And one of the things that we like to do here to find trading ideas is to look at the sectors. For example, if there's a sector that's really overbought or oversold, well, there's a good chance it's going to move. That means stocks within the sector are going to move, right? And different stocks are in the driver's seat at different times. So these are 11 sectors. We got tech, financials, healthcare, consumer discretionary, communication services, industrials, consumer staples, energy, real estate, utilities, and materials. Now, materials and utilities and real estate are each all really small. Wow, look at that. These guys were like 2.5% of the market a month ago. Now they're all down to like 2.1, 2.2%. Well, utilities is 2.4. That's just a reflection of as the tech sector and the bigger stocks are moving higher. I shouldn't say bigger stocks, but the bigger sectors that are moving higher, these guys become less important. Consumer staples is 5.6%. Sometimes you can get some good signals here because money sometimes flows into consumer staples before the market heads lower. It's your classic flight to safety. And then you can get some calls out of energy too. Energy goes up, it might be bad for industrials, so forth. So let's go and look at the S&P. Pretty quiet day today. I mean, basically it was unchanged. So we're going to look at our biggest sector first, tech. And what we're looking at is the ETFs that track these sectors. And as we kind of thought would happen, not surprisingly, we got to a resistance level and we stalled out. People that bought back here are placing sell orders over here so they can finally get out of break even after 3 or 4 months. We can also look into the sector because sometimes these sectors are dominated by one or two stocks. So here is the technology sector ETF. So we can see now there's probably 50 or 60 companies in the sector, if I had to guess, maybe 40, I don't know. But check this out, Nvidia 14.7%, Apple almost 14%. So that's 28%, Microsoft almost 13%. So you have 3 stocks are 40% of this sector. So obviously, if you're trading the sector, you should really kind of know what's going on in these guys. If you're trading Adobe, well, I mean, everyone has a different style, but if I was trading Adobe, I would be watching what's going on in video. And I don't mean it as a recommendation or anything. I just, if you're trading anything in a sector that's dominated by a couple of big stocks, you should really kind of pay attention to what those big stocks are doing because it could influence the stock that you're trading. Because the way these ETFs are structured, there's a certain correlation that goes on between these guys, which you can always ask me about. All right, next up, the Clifford's up there barking at something. I don't know what. This is usually like, oh, the Amazon package of whatever I bought for my wife or daughters that we don't need shows up time of day, but that's a different story. All right, here we can see in the healthcare land over here, right? This is hitting resistance as well. So let's just think about this. Tech is hitting resistance, healthcare is hitting resistance. Now there's resistance here because there was support here. And this is buyer's remorse manifested on a chart in a different way. People bought back here and the thing went higher and they're like, ah, this is great. This is easy. I'm the next Steve Cohen. Then it goes lower. And a lot of them are like, this really sucks, man. I made a mistake. So I'm going to get out. If I get out at break even, I'm going to. If not, I'm just going to hold on. When it finally gets back up to their level, remorseful buyers from here placing sell orders here can make what was support turn into resistance. All right, just to take it a step farther, there's support here because it was resistance back here. Some price levels are more important than others. I mean, look how important this 146 level is. With support here, 150.80. So people sell and the price goes lower and they're like, I'm the Mama Jamma, I'm the new Steve Cohen. And then the price goes higher and it's like, damn, I made a mistake. So when it finally gets back to the level, you get people that sold here placing orders to buy their shares back. So seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. If you want to be a successful trader, like on a short-term type of time frame, you really need to understand this because some price levels are not important. The markets will just blow right through them. Some price levels are important and the market gets to them and it stalls out and it reverses. And that's where our chances to make money are. Now, here's our financial sector, very overbought. I guess this is the Trump trade, I guess you could say. Man, these markets are on friggin' fire. But markets don't go up forever, man. So now here is our financial sector. Sometimes we can look within this sector at the industries, right? So the financial sector is really ripped higher. Let's just take a look at, there's 5 industries in this sector. This is the banking one. All right, so that's not as overbought. Let's take as one would think. Here's our insurance. All right. Let's see what else we got. Capital markets. I forget the symbols. Oh boy. Spider Capital Markets, KCE. Yeah, now this is really overbought. So if I was going to play a reversal, this is probably what I would be looking at. Within this industry, I would be targeting specific companies. And just like, we just did before, you could look at the industry ETF. The best traders, they let the market tell them what to do, man. They don't guess. If you guess, that's a pretty damn good way to lose money. All right, capital markets. So here are the holdings. Yeah, Coinbase. Yeah, now you see, this is not a very this is pretty well diversified. So this has probably been ripping higher because Coinbase has probably been ripping higher because Bitcoin has been ripping higher. So we can understand how there are not coincidences in the market. So let's take a look at Coinbase. Yeah, I mean, look at that. I mean, this can't go on forever. Maybe it goes on. Maybe it reverses tomorrow. Maybe it reverses in a month. But things just, things like moves like this are unsustainable. I'm not saying in a year from now it's not going to be higher, but there's going to inevitably be some profit taking. Same thing with if we go to our next, let's go to consumer discretionary, right? And we'll just take a quick look at this. And you can see that consumer discretionary is actually dominated by Amazon and Tesla. These two stocks together are basically 40% of this sector. Tesla has gone parabolic. Once again, I mean, I don't know where this thing is going to be in a year from now, but my guess, if I was a betting man, which I'm not, which I should be, because all I got to do is bet against the Patriots every week and I would win because they suck. But that's that's another aside there. Um, in a week, I would think this thing is going to be lower, right? And as we saw, things tend to get to resistance levels or levels that were peaks before, and we're getting close to some of them around 385. All right, there's my target. There's my target price for Tesla, 385, and then we see reversal. But look at that, right? Resistance at former resistance levels. This ETF, or this, I'm sorry, the sector ETF is XLY, and this is because of Tesla making this move. And you can see the sector ETF is at a former resistance level. So, this move could be fizzling out. I just take a quick look at Amazon. Yeah, this guy's pretty overbought too, but this has actually started to reverse. All right, next up, communication services. That ETF is XLC. This now this is another sector that's dominated by a couple stocks, Facebook and Google. Yeah, so Facebook and Google together are about 30% of, actually, wait, they're actually about 40%, almost 40% of this. Now Facebook's kind of consolidating. Google's Google looks okay too, which must mean that a bunch of these other guys in force, must be having an influence there. So, for example, like I said before, if you're trading Facebook, if you're trading Disney or Electronic Arts, you should be paying attention to Facebook because Facebook's movements are going to move this ETF, which are going to move your stock. Things don't trade in isolation. Okay, next up, industrials. Ooh, look at that. That's really overbought. This is probably the retail trader coming in here, buying industrials. Yeah, so this is going to be, I won't get into it tonight. Maybe I can look at it tomorrow, but just like we did before, we can go into the sector and look at the stocks and find the one that's like the most overbought, General Electric, Caterpillar. Because if the sector reverses, well, the sector is really just the aggregate of everything that's in it. So there are going to be stocks that reverse by more, and there are going to be stocks that reverse by less. So we target the ones that look like they're going to reverse the most. Now, just looked at Caterpillar and GE. Neither one of these guys looks too, whatever, vulnerable. Let's just take a quick look at Uber before we move on. Yeah, weird. Huh. All right, well, whatever. You get the idea. And if you have any questions, just hit me up. Mark Petrino at gmail.com. All right, consumer staples. That's XLP. Yeah, not too much going on there. Although you can see how the resistance converted into support over here. So like we talked about before, now you have the opposite. You have support converting into resistance. All right, energy. Before we look at energy, let's just take a look at oil because oil is back down to a level where I'm anticipating a bounce. Right? Look, this going back here almost 2 years ago, let's see, March. Yeah, almost 2 years ago. Well, we'll call it 18 months ago. Every time we got to 67.30, we bounced and we're getting pretty darn close to it again. And this was a successful trade that I recommended a couple of weeks ago. A lot of times when things get to support, they find support again because people that sold here regret doing so when the market blasts off. So they're trying to buy their oil back when it comes back to their level. That way they can kind of mentally erase their mistake. We get there again. All of a sudden, some of these people that want to buy start to think, someone else might be willing to pay a higher price than me. That's who the seller's going to go to. I don't want to get shut out. So I'm going to bid higher prices. Snowball effect. A lot of times you get to support. And what happens? Well, look at that. That's a pretty interesting level. Support, resistance, resistance. It's all this stuff is all just psychology. Forget earnings. If you're a trader, forget earnings, forget EBITDAs. Just think about psychology. All right, now here's our energy sector, right? Now I don't know. Look at this though. So if oil breaks that support, and I don't know if it will or not, but if it does, that means this whole energy sector is going to start to roll over. See, we're at resistance, and as we know, when we get to resistance, sometimes the sellers start to undercut each other. We first got to resistance here around 94 back in July. sells off. Gets there again in August, sells off. Gets there again in October, sells off. Gets there again now. Is it going to sell off? Well, we'll see. If oil rebounds, there might be some stuff on the upside here, but I would be more watching oil for if it breaks that support, then we can come look for some ideas here on the short side. All right, here's materials again. See the same stuff we see, and people say like, Mark, how is it possible you see the same chart patterns and things that are so different? And the answer is the securities might be different, but the people that are trading them aren't. And when we look at a stock, or I mean, sorry, when we look at a chart, we're looking at the psychology of the people that are doing the trading. And whether you trade utilities or you trade Bitcoin or you trade oil or you trade currencies, guess what? You experience the same emotions. And that's what shows up on the chart, right? Just like we talked about. Resistance becomes support because this is real estate. Resistance becomes support because of what? Seller's remorse. People sell, and when it goes higher, they're like, I want to buy my real estate stocks back. So whether you trade real estate, if you trade real estate, you experience what? Seller's remorse. If you trade crypto, you experience what? Seller's remorse. So forth and so forth and so on. All right, everybody. Hopefully that's just a kind of an interesting idea here where we're going to be looking for some trading ideas over the next few days. I think there should be some pretty low risk ideas on the short side, and I will see you then. Thanks, everyone.